Hello and welcome to Kenya's Market Map. This is a weekly Kenyan podcast that seeks to map out business activities that occur during the week and give an in-depth analysis of the same. My name is Easter Fanning, and with me is my co-host for today,
Daniel Kanya.
Yeah, we're usually three, but today our other co-host, Kigen Kiplimo, could not make it to the recording session because of personal reasons. Yeah, unavoidable circumstances, really. Yeah. So, this is the last week of October. Yes.
Yeah.
We've seen quite some activity in the market, especially the stock exchange market. Kenya, and today we're going to go past the boundaries, across the boundaries into Uganda and see something about MTN Uganda. So listen in and yeah, just listen in to get what you have to say about that. Something very interesting is going on in the Uganda Stock Exchange with regards to what's the company? MTN Uganda. And yeah, we want to talk about that. Within our boundaries, Kenya, what we saw is there's an introduction of the NSE day trading. There's AB Axis, which is one of the most renowned names in the investment space, gave a sell recommendation on Safaricom. I don't know what you think of that, Kalia.
Very surprising. It was very surprising.
Yeah, it is quite surprising, actually. Yeah, and then also something global. Facebook decided to rebrand to Meta. So again, we'll delve into that. But we start with our weekly highlights. Kalia?
Yeah, my weekly highlight was quite it's actually Tesla. They hit the $1 trillion mark in market cap, which is, I think, incredible for a company that really, it's good and it's a visionary thing and working towards sustainability and environmental sustainability with electric vehicles being the core business. But in terms of their actual revenues and actual fundamentals, there are big questions on whether it supports such valuation, and there are big questions whether is it a bubble? Is it similar to what was seen in the tech bubble of the late 90s? So that's the big question with Tesla, because for a long time people have been saying it's not supported by fundamentals, yet it still keeps going.
That is my question.
It's still keeps going up, but then it has a core group of investors who are like believers. So whatever happens, they're buying, they'll keep buying more and they'll keep holding on to the stock.
What does it advertise itself as?
How does it do? No, I don't think actually. I was seeing somewhere someone was saying Tesla doesn't really do marketing because they have Elon Musk. Elon Musk actually has more followers on Twitter than Twitter itself.
Yeah, it does market itself. It doesn't market itself.
Yeah, it's basically.
But how is it listed? Like on what category is it? Which industry is it listed under?
I haven't checked the specifics, but I believe should be industrial and automotives, because ideally that's what Tesla started as, with electric vehicles. But now they're venturing into other things with. Now I don't know whether SpaceX is part of Tesla.
I think it's a separate company,
or whether it's a whole automation. I don't know whether it's a subsidiary or a different venture altogether. But because it's Elon Musk, like everything just gets lumped together.
Because you see, 90% of their revenues come from automobile sale. Yeah, so people tend to like. Fundamentally, it is a motor sales company. You would like, if you're to put it to its peers, you would consider Kina
General Motors,
the Toyota,
and it's now bigger, like the other car companies, like
more than
like.
Do you know it took over 50 years. 50 is even an understatement. Over 100 years to get Toyota to where it is now.
Yeah,
but it's only taken Tesla to surpass it. to just get to where Toyota is, but to surpass it.
Like, yeah, because it surpassed them like a couple of years back.
Yeah.
It's not like it's a new phenomenon.
Yeah.
So it's just, I don't know.
But that's to speak to your what you tried to say, that maybe there's a bubble, because it's been, people talk about Tesla every day, and it keeps the, whatever people say in the about Tesla keeps having a good effect onto the stock.
Yeah. It could be a bubble. It's, you don't know, because that's the thing with Tesla. Like, how much growth is happening is not really, you can't really do like a fundamental analysis on it and say, okay, this is okay. People have done that, and the price that they're finding, the intensity is considerably lower. Yeah. There's this parody on Twitter. I don't know if it's a parody account. I've always assumed that it's a parody account. It has to be a parody account. It's a guy called Parik Patel. Parik Patel, CFA.
Like, I know that guy.
Yeah, like so last year, he sort of like he was saying, I have a bull recommendation, I have a buy recommendation on Tesla. I'm bullish on Tesla. And this is the price, and here is the valuation justification. Then it was like current price, I don't know it was how much. Then stimulus check, because guys were getting stimulus checks last year. COVID stimulus check, $600. It was like whatever price it is plus a stimulus check of $600. New price, it was coming to around $1,264. But as in, it's outlandish. Like, it's really not backed by any proper science or valuation technique, but the price still keeps going up.
But you see, that's what the stock exchange is about. It's about supply and demand, and the supply is fixed. It's what Tesla issues for trading into the market. But the demand is a factor of a lot of things, including speculation. Understand? So it's that speculation that is benefiting them, if you'd put it that way.
That's it's the but now the
fuss,
the whole excitement about whatever because Elon Musk also has the power to move markets. If you think about, whenever he mentions a random coin, like,
hey, Dogecoin,
like, prices shoot up and everything like that. So there's a speculation bit, but now that's the risk. That's the biggest risk with when you're just doing things because for speculation without necessarily without necessarily doing the analysis, and making a decision based on that. But for the past maybe 3 years, I mean, the fundamentals are not there. Like, how the US markets have been working, and markets in general, like, it's been crazy. Because if you're to look at the underlying everything, basically there's a lot of cheap money available in the States. The cost of finance is very, very, very low. So people, banks, institutions, even retail investors are able to get almost free money, if you can call it. And where do they take this money? So they just take it to the stock market. To the stock market. And
they use speculation.
So because you just have a bunch of money, you're just like, okay,
what's the hot thing?
What's the hot like, go to Wall Street, Reddit, Wall Street.
Reddit has become a very good source of information.
See what is there, then guys just make buys, and that's what's happening. So because, and that's the other thing, because there are stories of inflation in the US, the rising inflation, and the Federal Reserve, is under pressure to like start stopping the quantitative easing that they've been doing, and this was primarily to aid recovery efforts because of the pandemic. So they even like lowered interest rates further. So it's just a matter of time before they start tapering. They start now. They raise the hike interest rates so that is to control inflation, and primarily to control inflation. So as soon as that happens, then the effect, what guys are afraid of, is the effect that it'll have on the stock market, because now once interest rate rises, then people will move. They'll be the core institutional investors and even retail, I believe, but mostly institutional, who will most likely pull their money from the stock market and shift it to the bond market, because if the rates are rising, then there's an opportunity there. So they'll move
security
it there
as well.
Yeah, so once that happens, there is a whole now it's more selling is happening in the stock in the stock market, and then
bearish.
In that case now people now start
exiting,
selling and that and so, and then the things that will be hit the most probably would be, like, the risk would be a company like Tesla, because it's
because people start questioning the fundamentals now.
It's trading a lot on, to be honest, it's trading a lot on hype.
Hype was what I was looking for.
It's trading a lot on hype. So because if you're to look at even you from a portfolio perspective, I think guys are on Tesla because of the momentum that it has, and you do not want to miss the gravy train. But now if guys now be like, the first ones out would be this especially I think they would, because I think good companies would, with good fundamentals, like, guys would still remain on that. So that is the thing with Tesla. So it's very interesting, basically, like how that price is going. And still I'm looking at the research, like, it's mixed between, like, buy, hold, sell. Like, still has a positive, like, almost 48% of analysts are giving a buy recommendation on Tesla. 26% are giving a hold recommendation. 26% hold, 26% sell. And it's interesting. And then, so here's the interesting thing with Tesla. So if you're to look at hedge funds and institutions, especially hedge funds, not many hedge funds hold a position in Tesla, and that is primarily because I believe it's because Tesla is, the fundamentals do not really support such a valuation of the price. So what that means is that a majority of the holders are actually retail investors, not necessarily teenagers, but it's
who are the people driving Reddit, the conversations on Reddit?
It's young people. It's young, but not necessarily teenagers, but young adults.
We know the demographic.
Just a bit below 35 guys. So it looks like the majority of guys who are holding are basically retail investors. And no, those are the guys who actually believe in the product. They believe in Tesla as a company. They believe in the future of Tesla, so they will hold. That's the plan. They would hold, and the intention is to hold. So, but then the risk is that because they are very volatile, they can be a very volatile
group of people.
So if there's a downside in the market, especially because of fear, uncertainty, and doubt, FUD,
as always is.
As soon as it's a red day in the market, now people will start questioning whether should we hold or should we start selling. And once a massive sell-off starts, then
that's it.
That could be a slippery straw. So Tesla is it's unique. It's just weird.
I like how you have related that, the performance of Tesla, to the supply of money in the US markets. Anyway, about that, now that you talked about inflation and the US having a very low cost of capital, and therefore a huge supply of money into the US markets, something happened in Zimbabwe. The central bank revised the basic
the base rate
interest rate from 40% to 60%. That was crazy. Crazy. Because now you see the retail bankers now, they're going to be on top, above 60 a bit. Slightly above 60. So if you go into Zimbabwe, for you to borrow $1,000, you're gonna pay a whole $600 in interest.
In interest.
Yo.
It's
That's serious, man.
yeah. I was talking to a friend of mine who's a banker in Zimbabwe.
Yeah.
So I was asking him, hey, what's happening here?
Yeah.
It was like, so what people are actually taking loans to speculate on forex because they know that they're going to make more money with the foreign currency depreciating than the interest that they were being charged by banks. So yeah, that's what guys are doing. They're just taking loans and going to speculate in the forex market, essentially betting against the Zimbabwean dollar. Yeah, and the government is trying to like rein everything in, but I think there's a well-established parallel market, like a black market that trades with its own prices and its own rates outside the officially recognized rates. Market rates officially recognized by the central bank. Is it called the Central Bank of Zimbabwe? Yeah, but their central bank.
Because again, I had a conversation with a very good and respected friend of mine. He's Zimbabwean, and we went slightly into the fundamentals of why Zimbabwe is where it is at the moment.
Yeah,
and the problems date back to the 90s when land in Zimbabwe was being transferred from the white man's hands to the people. You see what happened in Kenya? Land was transferred from the white man's hand, the Brits' hands, to the government, then to the Mwananchi. That second bit did not happen in Zimbabwe. Land left the white man's hands, got into the state's name, but it was never passed on to the citizens.
Yeah.
So what does that mean? Land is a factor of production.
Yeah.
An important factor of production, right? So there are no title deeds. You understand? So people could not like produce as much.
Yeah.
You understand? Because you own no land anyway. Plus, if you own no land, you can't even access capital because what securities are you going to use? Because the white man came and left you. When they left with almost everything. So you left with bare hands.
Yeah.
The only asset as an African you could have been left with is land. Or cattle or livestock. Yeah. But here's a situation where you do not have any proof of ownership of land, and so you can't use that as collateral to access capital, then start production and all that. So production was low. Supply of food, because that's the main thing you get from land.
Yeah.
It was low. Supply of food was low, but the demand was high. I mean, people have to eat.
Yeah.
So what did that do? The supply being low, the demand being high, the government had to borrow now. Plus, they were financing some wars in DRC. So there was a huge demand for money, but money was not being generated because the economy was doing badly. There's nothing being produced, basically. So they got into debt, and the government again, I don't know, was it Mugabe was in power at that point? 1990, I think.
1990.
So again, the government introduced price controls. We talked about price controls the other time.
Yeah.
And how much we were like, were you of the same opinion, or it was Keegan with whom we were saying that the government has no business doing business?
Yeah.
So now Zimbabwe did this. The Zimbabwe government did that. They went into business. They introduced price caps to prices of food and all that. Because now food is expensive. So to curb inflation, let's put a cap on the
price of food.
Yeah. So what did people do? Because the farmers, there's no incentive now to cultivate anything.
Yeah.
The few farmers who could still cultivate, they had no incentive of cultivating, because you produce, the government won't let you sell at the market price. They introduce a cap. So they went into the black markets. So I think you said something about people resorting to alternative markets.
Yeah, that's essentially on the foreign exchange market. So when you're changing from the Zimbabwean dollar to the US dollar,
they would go to a bank. They would go to. It will be a mutual agreement between two. Gentlemen. It will be a gentleman's agreement, right?
Yeah, there are markets where the prices are considerably higher. Than what it is in available to banks or available in banks. So it could be a function of something maybe to just read more on and probably research more on. But I'm guessing that the banks actually have a limit on how much you can transact, how much you can exchange at a particular rate.
Yeah.
Whereas in this other informal markets,
Yeah.
you
Let's call
can
it
do
for what it is, black market.
Yeah, in the black market,
Yeah.
you can trade whatever, however much you need,
Yes.
at whatever price that you need. So
Purely on demand and supply basis.
yeah, it's purely demand and supply.
Yeah.
And they're crazy rates, I think. Yeah.
Kalia, you mentioned that the main reason for this adjustment was speculative. The government was seeking to curb speculative borrowing.
Yeah, it's just to limit, because you raise price. It's to limit the amount of money that's circulating in the economy. When you do such a hike, then less people are going to
borrow.
Going to borrow, and then that means there's less money essentially circulating in the economy,
and therefore you hope that you're going to lower the inflation.
Yes,
but then again, if it might be a cycle. Because if you reduce the money in circulation in the economy, people are not producing as much as they could, or as much as their capacity can allow them to, and so jobs are not created, and so again, you're now creating cost push inflation. What is there is demand pull inflation. Now, if you introduce these measures, you're going to introduce another cost pull inflation.
Yeah, cost push
inflation. Yeah.
True, but that is. Because from the government side, it's that a lot of this money is going towards speculation, not necessarily actual productivity or actual production.
Okay.
So in that case, the less money in the economy then means less demand for people to do such things. So that's the argument.
Cool.
Yeah, but as you said, I think it's short term, and then you need to find the balance between the monetary policy and your fiscal policy to get a balance between the two.
Yeah.
Yeah.
Cool.